Hey guys, how's everybody doing? Good morning. Good morning, Jackson. How are you doing over there? Speak, Jackson. Can you speak? Want to come here and make an appearance? Jack does not want to make an appearance. All right. Well, the market's doing a little bit better today. Let's see if we can put in a higher low. That's the first step to turning this thing around. All right. We'll start first with the SPY. Okay. The SPY. Okay, well, you can see it's a little bit of wishful thinking. We've opened right in the middle of yesterday's range. The VIX actually opened up a little bit. It's not up as much as it has been the other days. SPY opened down a little bit. How's it? Yes, down 32 bips right now. The key we're looking for, we want to darn sure hold this low at 560, 556. You don't want it to go lower than 556. All right, that's the SPY. Here's the Qs. The same thing we opened within yesterday's range. We're only down 7 bips though. 6 bips, 3 bips. Red to green, red to green. Here comes red to green. 1 bip. Come on, green. Come on, green. Red to neutral, red to green. There we go. It's over. The crash is over. Bye, bye, bye. All right, everybody. Go out and get NVIDIA options. Go out 3 years and go out as far as you can and spend all your money on NVIDIA options. The bear market is over. I'm just joking. I am just joking. All right, so Russell on a comparative basis is the strongest of the bunch. It is actually up 12 bips. All 3 of them are still trading within yesterday's range. Step number 1 for the bears would be to knock the price out of yesterday's range. In other words, to make the indexes take out yesterday's low. Step number 1 for the bulls would be to knock it out of the range on the other side. And then if we have a neutral day, it should stay in the range. Yesterday was a pretty big range on, for instance, on the Qs, it was a pretty big range. It went from 485 to 469. What is that? 16 points on 500. It's 3%, more than 3. It's more than a 3% range. Yeah, that's an insane range. All right, let's see how Bitcoin is doing today. After we look at the indexes, we'll look at Bitcoin, then we'll look at gold, oil, and volatility. Here's Bitcoin on Coinbase on a 30-minute chart. Now this looks stronger than the other charts, stronger than the market charts. Looks like Bitcoin bottomed at 76,000 and is now bounced to 81. The last couple of times it's bounced up here, or the last time it bounced up in this area, it took out the 50-day moving average. The faster moving average is the 50-period moving average. The slower moving average is the 200-period moving average. Anyway, we're under both. It's a bear market, but retracements to the 50, lots of times that's where people re-enter short, and that would have been a great place to re-enter short for ultimately a new low. Is this a great place to re-enter short also? We'll see. We'll see. Okay. Let's see. Gold, oil, and I look at gold by looking at GDX because gold to me is GDXY. Since I have shares in GDXY, it's based on GDX. It's not really gold. This is gold miners, but anyway, it's been looking really, really good. It's up today. We can actually look at gold itself also, the ETF GLD looks very similar. All right, let's check out a little USO. This is an oil-based ETF. It's up 1.5%. Wow, that's good. Oil's gapping up. Even NVDY is gapping up. Now, of course, I sold it, and it was like down 10% yesterday, so I'm still fine for selling it, but it's gapping up today. Look at MicroStrategies, up 2% today. All right, gold oil. Let's also check out volatility futures. Well, actually, here's volatility futures. They trade 24 hours, and we did get some relief overnight. Also, there was a contract switch. It looks like we gapped down. Well, no, you have to look at this thing right here, contract switch. So the March expired, went off the board. They take it off the board. It probably expires Friday, but they take it off the board Tuesday. Then they put the April on the board. So there was a difference in the price, and that's what accounts for the gap. That's not a real gap. But anyway, so volatility is coming in a little bit. The thing that matters most to me is volatility of volatility, VIX of VIX. I mean, it's making a red bar. It's still in the range. Oh, no, it actually hasn't printed yet this morning. This one's delayed, and it takes a while to print. This one should be down when it starts printing. This one you can't trade. It's just an index, but this one will be down. It just hasn't started trading yet. What time is it? It probably won't start trading for 3 minutes. All right. Well, that's fine. So, and then we'll look at cash VIX. And this one is trading. It opened right there, right with the prior day's range. All right, so let's look at I don't know what to look at. Say hi to everyone who's here. What's up, Jeff? How you doing? Yeah, I know. I have a stupid sense of humor. Don't listen to me most of the time. Anyway, I'm not. Yeah. Anyway, yeah, I'm glad I'm just joking too. But there are some influencers that the market's been down, and on the day it turns, the first day it turns, it's all good. It's all good. Let's and then they start suggesting super risky investments. I was trying to think of the riskiest thing I could think of, or that the biggest waste of money. That's what I was thinking. Go choose the most volatile stock. So Nvidia be one. You could also use MicroStrategies. Go out to make it as risky as possible. Go out as far as possible in time, or actually to make it as risky as possible would be to go out short in time. I should have said, let's go out to Friday. Let's go out to this Friday. But you want to buy, and you want to spend your money on a deep out of the money call that just has no chance. And that's basically the biggest waste of money with no time for it to come true. And so that was the joke I was trying to make. All right, I'm just trying to stall time for the market to start trading at here in a few minutes. We can look at some different stuff. Okay, so let's do this. Let's try to find some good news today. Let's go to the stock screener, and let's find a stock, and let's find I might even do this in my own account. Let's find a swing trade, a morning swing trade of the day. Indexes, I'm fine on indexes. I just keep rolling puts, and I'm doing great. Or I rolled them out some more yesterday. If the market keeps dropping, I'll keep doing well. If it doesn't, that's fine too. Anyway, let's look for big caps that are a strong buy. So here we have, but none of them are high yield based except ExxonMobil. But ExxonMobil, Procter & Gamble, Johnson & Johnson, AbbVie. I was looking at this one pre-market. Okay, so look at this thing, AbbVie. So, technically it's strong. It's a good stock. It has dividend. It makes about 3% per year. Next dividend next date is April. They employ 55,000 people. I mean, this is just a good, fundamentally strong stock. I was trying to see if it was in any high yield ETFs, but I thought this is pretty interesting. I didn't know if you guys knew about this, but you can go to FinViz when you're looking for investments, and it'll show you what ETFs this thing is in. So like if this is a good stock, I want to get it. Well, it's in VTI and VU, of course, because everything's in VTI and VU and SPY and IVV. Okay. But it's also in SCHD, which is a good growth and dividend type fund. It's also in VTV, which is a value ETF. It's also in the healthcare sector, XLV. I think this is interesting though. It's also in the Vanguard Dividend Appreciation Index, VIG. It's VYM. There's an ETF that's a Vanguard High Dividend Yield ETF, VYM. I've heard of that. And then it's in DGROW, which is Dividend Growers. But it's not. I wish they had a high yield fund on it. Somebody like Curve or something had a fund that was paying 40 or 50%, because this would be a good one possibly to get in. But right now, of the technically strong big cap stocks, if we wanted to look at the technically strong, how do I get back to screener? Technically strong big cap stocks. I guess this is it. I was on a different screener somewhere else. I have too many windows open. Obviously, story of my life. All right, I'm just trying to stall so we can see how the buffer report's doing. It now should be open. So let's go look at it. GPTY verse. All right, here we go. Alti. Look at that. What a difference a day makes. Oh my gosh. Remember yesterday, every single freaking one of them was down. Hopefully yesterday was the capitulation. Hopefully yesterday morning was the step too far that we needed to run the market the other way, at least temporarily. Okay. Well, this is good to see. Soxel's down a little bit, but who cares after yesterday, right? Okay, LFGY. I bet these guys are on fire. Yep, they're all up. Maybe not high, even maybe not clean spark, but that's fine. It's whatever, right? They're all up. What about old GPTY? GPTY looking nice, up 1%. Everything's up. TSM's up. Marvell's up. The problem was everything was down 3 times as much yesterday. Remember, all these funds everything was down 6 or 7%. Okay, well, that's great. Today, everything's up 2 or 3%, 1 or 2%, 1, 2, 3%. Where, anyway, all right, well, we'll see what happens, right? All right, over to the index buffer report. Okay, SPY's just basically not moving. So, feed and 5-year up the most today for, instead of being down the most. They just go back and forth between being down 3% and up 3%. That's just kind of how feed and 5-year are. It's just what they do. FEPI's up 1.06 points. I wore my FEPI shirt yesterday. Oh no, my inverse fund is down 0.5 point today. It's the first time. This thing's been doing great lately. This YQQQ has just been doing great. I made a great decision getting in that one. This is the first day it's been down in a while. Riser's up. USOY is up. XOVR is up. Anyway, all right. Yield max buffer. What's going on here? So Murny's down, but it was up yesterday. Apley's down, but who cares? It's just a little bit. Dizzo's down, but they're too woke anyway. Disney's too woke, so I'm just joking. I'm just trying to think of stuff to say. Babo, the China play, is up 5%, where the parent company is up 5.9. That is really good. Look at Ybit and Beto. That might be a good morning trade also, as a bullish trade on Ybit in case Bitcoin bounces back. All right, well, that's where I was going with this direction. Let's see. Well, let's see if AbbVie looks just like a really strong company. And so just because people ask me to show how I do this, I'm going to show how I do this. So let's say if we wanted to do a bullish swing trade on AbbVie, and I don't know anything about it. I've never traded it before. I mean, I've heard of it a little bit. I always start with bull call spread, but where the part that I do different comes in is you can do this in either Tasty Trade or you can do this in this one. But I use statistics to figure out how far I'm gonna aim for. Okay, so if I wanted to go out till the end of this week, the first standard deviation is 376. That's the market maker expected move. It's a little bit further than the market maker expected move, but it's in line with it, let's just say. So you could buy in at the money call and then sell one at your target, which is 227.5. That one at risk about $300 that's a great trade. 3-to-1 risk to reward, about the 33% chance of profit. I mean, you have to be right about the direction, but that wouldn't be a bad way to play a swing stock. Now, let's say we want to go out further. Some people don't like to go the end of the week. Let's say we want to go out to April. We think this is going to go further. We want to let this swing further. Okay, well, it's going to change our targeting decision, right? Well, sure enough, it does. Because when we go out to April, the market maker expected move and the standard deviations and everything is out here. The standard deviation is 232. The market maker expected move, if I opened up Tasty Trade, would be about 230. It's just right inside the first standard deviation, but they're in line. So we could do a trade. We could do a trade like that. I could either aim at 230 or 240. There's no 240. There's no 235. So then lots of times I'll let the math decide. If I aimed at 230, I would have to risk 860 to have a max profit of $1,100. So I'll let the math decide. But then you can also move the at the money option further out of the money, and you can change the math a little bit. Here you risk 328 to make 672, and that's going to be the last one available. I don't like the math on that. I wouldn't do that. So, let's go out 2 weeks here. Let's see if I can find a compromise. Now, here we go. Let's go out 2 weeks. The expected move for 2 weeks is only 225. So we can maybe sell the 227.50 option and buy the at the money. There we have it. There's a trade that meets all my qualifications. It hits the one standard deviation you should make, which is what it's kind of expected to do. You should make $750, especially if it goes a little bit beyond the one standard deviation. If it doesn't, you lose a third of that. You lose 250. Anyway, so I'm just going to save it, and we'll see how it does. Morning show swing trade. But that's how I do a swing trade with options. So in case hopefully somebody got something out of that. Let's see what the market's doing. All right, looks like the VIX is coming down. I just want all three indexes to be in the green. Yeah, the SPY's still down a little bit. It's fine. It's whatever. Maybe today's not the day. Maybe we're going to go make a new low and keep making new lows. Maybe we have to go further. I would have you notice, though, the Qs are up 0.5 point. The Russell's up 30 bips. So, you know, hopefully everything will be all right. Gosh darn it, I never can find the first screen. I mean, how hard could this be? Where is the freaking first? There it is. All right. All right, guys. Well, I appreciate you all for being here. I hope you have a good day, and I will talk to you later. See ya.